We also earlier in the day spoke to Dr. Aurodeep Nandi, the India economist and vice president of Nomura, who says that wait and watch mode is, well, more or less inevitable for the RBI at this juncture. He also stressed that policy reversal, rate hike regime is still a few quarters away. Here is an excerpt.
Wait and watch mode is kind of inevitable in this policy. RBI has a bit of a dilemma in terms of, how do you leave a house party without offending the host? So you want to normalize, right? Because indeed growth is picking up. Indeed, you've got pretty strong inflationary pressures there. Core inflation is quite elevated. You have cost push pressures that are slowly translating into more generalized pressures. You've got services and core goods inflation, those pressures inherent in the system. So the key question, the way to think about this is, will the second wave materially impact RBI's growth outlook? And while it would increase uncertainty, the answer is probably not. RBI has a very conservative growth estimate for FY22 at roughly 10.5%. We don't see that being impacted much by the second wave that comes in. So at this point, I think wait and watch is sort of the best alternative for the RBI, both on rates, both on stance. But what's going to be really important for the April policy is what revision they do to the forward guidance. See, for so long, they had essentially said that we are going to stay accommodative till the next financial year. Well, that condition kind of gets satisfied in April. So the question is, what next? So they may want to give a time-based guidance. So essentially saying that, okay, I'm going to keep accommodative stance, but for the next couple of quarters. While that gives a very clear indication to markets, it also binds the RBI in some form of corner. Or they could give, which we think is more likely, a kind of state-based guidance that says that, all right, as long as growth achieves certain target, and as long as we are looking at inflation, we will keep policy accommodative, and then we will consider a change in track. So as of now, I think for this policy, the RBI governor is going to reiterate that, look, we are going to keep ample liquidity. Yes, there is uncertainty on growth. Yes, inflationary pressures are high, but for now, let's not rock the boat.
Sure. What's your own assumption at Nomura, though, on how long interest rates are going to remain low?
Look, I think the policy normalization is going to be inevitable. It's going to come. So essentially, we are pretty much unchanged in terms of our broader view, which is that in the second half, you're going to see policy normalization. Within that, we will possibly see the stance change to neutral by Q3 of the calendar year. By the fourth quarter, we should expect a 25 basis points reverse repo hike. And then in H1 of the next year, and these are all calendar years, we expect the repo rate hikes. We've built in around 50 basis points or so.